All right, what's going on, everyone? Happy Tuesday. Welcome back to the live stream here on the Predicting Alpha channel. Today, we are going to be taking a look at some earnings events. A couple updates for you. We just updated the terminal, completely changed some of the aesthetics of it and the speed of it. So if you take a look, it's looking pretty damn sweet now. Very high tech, in my opinion. I love the way it looks. Things are really quick now too, right? If I go here, change the ticker, things load almost immediately. It's really awesome. We also added a whole bunch of new tickers. So as we go through this, if you have any of those new SPACs that you're looking at, or any stocks that you want me to take a look at with you, we now have a total of 1,261 stocks that we are looking at. So a lot more than what we had before. We used to have about 900. We added another 300, so things are looking pretty good. John, what's going on, man? Good to see you here. John, as we go forward, let me know what trades you're looking at. For the meantime, I'm basically going to be focusing on a few earnings trades that caught my eye. So let's get started here, right? First thing we're going to do, open up our earnings scanner. Sometimes you come in, you don't really know what earnings events there are today, right? So, Kyle, the BMO, before market open data is good. No problems there anymore, Kyle. So let's see what events there are after market close today. So I do 2021-01-20, right? So I'm filtering for the date there, and I want to see the ones that are after close. So I type in AC here, and we can see that we have 4 events to look at today. So let me know if any of these events are ones that are on your radar, and we can take a look at it. But for the purposes of this stream, I've already taken the liberty of looking at a few of these events, and I'm really only seeing 1 or 2 that are worth taking here. The first one being UAL, which I already have populated. And let's talk about what I'm actually seeing here. Now, when we look at earnings, one of the first things that we actually want to look at is what is the market implying right now? And we can see that the market implied move is 3.9%. Now, quick note for everyone, right? A lot of people, when they look for the earnings implied move, a place that they go and look at Earnings Whisperer. John, you might actually want to take a look at it. I made a post in that group, in your group, in the earnings section, breaking down why we shouldn't be taking a look at the Earnings Whisperer move. What they're basically doing is taking the nearest expiration straddle price, dividing that by the stock price, and saying that's the implied move for the earnings. But the thing is that has, if the nearest dated expiration is 1 month away, well, sure, it has exposure to the earnings event, but it has all of these other events or all of these other days priced into it as well, right? We were looking at one that was for, after market close tomorrow or something, and Earnings Whisperer was saying the implied move was 9% when the actual earnings implied move was close to 0%. They were saying sell vol when realistically it was actually buy vol. It was the completely wrong view to have, in my opinion. So yeah, just keep that in mind, guys, as we're looking for it. What we need to be doing here is stripping out the event volatility from the option chain. There's a mathematical way to do it. A couple of different providers do it for you. Obviously here in the terminal, we do it for you as well. But what we can see here is that for UAL, the current implied move is 3.9%. But what do we benchmark this against, right? What we need to ask ourselves is that a fair implied move to be pricing into the event, right? So we can come down here maybe. Well, what is the average implied move that they actually price into their earnings, right? What do we see on average? And we can see that current implied move is 3.9, and the average implied move is actually 5.18, meaning for this earnings event, UAL is pricing in a much smaller move, right? About a 20% smaller move than what we typically see for the stock. Now, what about that? That's what they say is going to happen on average. But what we're really concerned with when we're trading these earnings events is what actually ends up happening on average, right? If we were to look at the moves, historically, what ends up happening. And we can see that on average, it actually moves 5.5%. So this is a really interesting case because on average, we actually see volatility being overpriced going into earnings. But what we can see here for UAL is that it's actually been systematically underpriced. One way we can see this as well is by taking a look at this straddle P&L. Like what we're basically doing here is saying, if you had bought volatility going into each of the earnings events, how would you have done? And we can see that if we put the cumulative line on top, that, sure, the last little while you would have been losing money, but overall, buying volatility going into UAL earnings has actually been profitable. Not amazingly profitable, but somewhat profitable. We can see this for the calls too. The calls have been really good, and the puts, not so much. But in recent times, the puts have been a little bit more profitable. So Kyle, I was thinking that as well, right? That crap airline earnings could be priced in already. But I think what's also important to consider here is not just what their current revenue is going to be, but how their future guidance might change, right? There's a good chance that they come out and say, we expect places to be opening up by September, or, there's a lot of room there, I think, for uncertainty. And for that reason, I think this might be a cheap play. Something else that's worth taking a look at here is how the straddle price changes after these events on the downside, right? So we can see here that trading this earnings event, like we're going to take a bit of a hit if we are wrong, but if we're right, there's a potential for a huge reward, right? So if I were to be structuring out a trade for this, one more thing to take a look at. For the airlines, right, we have this new feature here, the industry move comparison. We can see that it has a really low move compared to the other airlines, right? Like AAL is implying a 5.7% move for their earnings, whereas UAL is only implying a 3.9. So if you wanted to take a long vol bet on the earnings, you think they're all going to move similarly together, this would be the one to be taking it on. So what can we do here? Let's go to our Thinkorswim and actually structure out this trade. I'm just having a bit of lag here. Okay, so UAL. And I want to be trading something expiring soon. So I would probably be looking at either the 22 or 29 expiry. But the main thing that I'd be concerned with here is the liquidity. And we can see that it's actually pretty tight spreads, right? 2 cents bid-ask spread on each side. So I would feel pretty comfortable coming in here and selling some vol. Now, since we see that... one second, let me do that. Now, since we can see that the stock's trading at 44.60, I might still do just the 45s instead of splitting it up. Get like a really tiny bit of positive delta just because, these calls have been more profitable. I wouldn't mind taking that on. And here's how I would just structure it out. I would probably do one of two things, depending on my account size. What I could maybe do is just sell this straddle. Right? I don't know if I'd be buying wing oh no, sorry, I'm going long vol here. I'm going to buy the straddle. That's really it. It's going to cost me $2 per lot to put on. You can see here that if we get a move, so for tomorrow, if we have a move outside of about, and let's say vol comes down a few points here. Let's see what vol should actually drop to. Come to our earnings analyzer tab. We see here that vol should drop, maybe 7 points. Let's see here. We can see that if the stock's currently trading at 44.70, if it goes below 43 or above 46.70, we will be making some pretty good cash. Our max risk on this position is probably about, $70 per lot, right? And this would be trading the expiry on the 22nd. Right, so this is really what we're looking at. This is what our position will look like tomorrow. Vol will drop about 7 points, and we're going to fall somewhere on this purple line. So not a bad long vol opportunity. It's too bad that Arya is not on this live, Kyle? He would be, I think he'd be salivating over this one. But we're gonna actually take a look at another long vol opportunity, right? It was pretty cool. We have a whole bunch of long vol chances right now. All right, so for you guys that typically want to, John, how do you guys have it in your group? The dumb bulls. For the dumb bulls, they could hopefully they're tuning in. They could take a couple of these trades. Check out this one. FCEL. It's tomorrow before market open, and it looks like, it repriced. Damn, it was looking really good before. We'll come back to this one. This is definitely a good short vol opportunity. Right? Implied move is just crazy, crazy bid. One of the factors we look at when we look for a short vol opportunity is an actual just high implied vol number. All right, we can see here that it had this one blowout, right? This one absolutely insane blowout. Besides that, short vol has been pretty good here. Look at that. That's absolutely insane what happened back in 2019 there. But really high implied move. Average move there. What's the skew looking like on this thing? I might put wings on this, to be honest. Crazy skew. Okay, let's structure out a couple of trades going into this earnings event. So FCEL, right? Pretty obvious what we should be doing here, right? We probably want to have a short vol outlook, right? It's a lot higher than the average move, a lot higher than the average implied move. Could be due to this huge move in the past, but you might want to do a little bit of research, see what's going on around this earnings. But a couple of different things that we could do, right? Let's say we have a bullish outlook on the stock. Something we could do is take advantage of that call skew we were seeing, right? Come back here. We're seeing that the near dated options, there's a whole bunch of call skew here, right? Meaning the at the money calls have a lower implied volatility than the out of the money calls. And we can use that to our advantage to structure out a trade. So let's say we come here to the 22nd, right? Where we're comfortable with that really short day to expiration because we really want to isolate that earnings. And we can see that the spreads are pretty tight all the way up the chain here. Well, what we're going to do is structure out a 1-3-2 fly. First thing we do is price the straddle. We can see it's going for $2. So stock, we're still on UAL here. My apologies. FCEL. Moving too quick. Okay, it looks like we only have the monthlies here. So let's structure it out still and see what it looks like. So John, for company, liquidity is always something to be concerned with, right? So companies that are not traded as much, that are maybe less liquid, we need to be a little more concerned putting on these positions. Let's say we wanted to trade the earnings for TPL and we wanted to put on an iron condor. Well, we need to be concerned with, are we going to be able to get in and out of the wings, right? A lot less liquid when we go that far out. How much are those going to cost us? And are we going to get stuck with them? But first, let's quickly do this, and then we'll take a look at DocU. Oh, John, let me check that for you after. I'll see if it's loaded in. We look at the 1,250 most liquid names right now. So if it meets that criteria, it should be there. Okay, so we're going to sell the straddle. It's about $6. So stock is trading at 17. We're going to come to the buy side here. We're going to buy an unbalanced butterfly. And we're going to go $6 up, so up to 22. And then we're going to go another $3 up, so up to 25. And let's have a look at this trade. So you can see here what we're really getting is an ability to take advantage of the call skew, right? So what we're able to do here is we're buying an at the money. We're selling 3 of those expensive out of the monies. And then we're going really far out of the money to buy a bit of a hedge. And what you can see here is we have a defined risk trade where if the stock falls between $16 and about $24, we are going to make a great return on the risk that we have to put on. Right? So let's say we bring this down to one lot. You can see here that our max risk is about $80, right? $90. And our max potential payoff is about $500, meaning we're getting about a 6-to-1 risk reward on this trade here. And let's see how this position would evolve after the earnings event. So FCEL vol should drop from about 164 down to 151. So it's about a 14-point drop. So let's drop vols 14 points. Let's move forward a day here, right? Our position will look something like this, right? So if the stock rallies at all, we're going to make some money. And as long as the stock doesn't go above 36, we're going to be making some money. We'll be falling somewhere on this line, making about a 100% return somewhere on here. Oh, is it, Kyle? Yeah, there's some wacky stuff going on with this stock. Yeah, John, no TPL in the terminal. But we do have docu. Oh, you're kidding me, man. That's so funny. Okay, so yeah, so vols would actually only drop about 6 points. Let me see here. That's funny. Yeah, similar position, right? You'd be making about, a 50% return tomorrow if the stock were to rally. Usually with this, we like to be trading it a little nearer dated, but in the end of the day, we don't have something nearer dated, right? We have to trade the monthly if this is a trade that we want to be taking. John, any other stocks you want to look at? Do you want me to do a quick? What's your view on docu? What are you looking at for it? Right, implied vols for the 30 days looking tiny bit cheap. Nothing really worth looking at there though. We can see that the skews on the lower end than what we usually see. A little bit of call skew. The 90 days really is what is elevated here. So we can probably say earnings is a little bit further out, right? Yeah, March earnings. What are you looking at here, man? You enjoy the valuation of it, but you don't think its earnings can squeeze out any new value areas. So are you like slightly bullish on it then? Because if you're slightly bullish, actually, let's take a look at this quick. If you want to take a directional bet, I would probably either, honestly, if you're just bullish on it, I would probably look at the stock. I would just pick up the stock. I'm not seeing anything too much you can take advantage of in the option chain here. But let's say you're 1 month bullish on it. Maybe you could structure something, slightly out of the money. Let's say 265. We can go here. Maybe buy a vertical here. We pick up a vertical like this. You could do something like this, where if the stock goes above 266 in the next month, you'd be looking pretty good, right? This wouldn't be a bad idea at all. But to be honest, I think your best move is just to pick up the stock, right? It's the best. It's what expresses your view best, right? If you just think the stock is going to go up, that's really the trade to make. Remember, the options are the volatility component as well, right? So we need to have a view on that if we're going to be trading the options. It's just what makes the most sense. But yeah, that vertical looks okay too. It's more or less a directional bet, right? You can see if we go back to it, your instantaneous P&L is more or less directional. You think it and Peloton are not COVID stocks? So you think they'll survive the outflow from major COVID movers? Yeah, I would agree. Honestly, I don't really have a ton of expertise in that space. I'm more so just focused on, what volatility looks like today and where can I take advantage of it. But Peloton's just been on an absolute tear, right? And the thing about Peloton is I do think it'll survive the whole COVID situation. I think they have a really good business model. I think they have a few underrated things like their app. The actual workout app probably drives a lot of revenue. When's their earnings? So earnings 60 days out probably. Okay, yeah, it's actually not that far out. It's only 13 days out. Let's see here. Okay, yeah, it's right here. What's the implied move for it right now? About 8.9. You could probably get away with buying some vol right now, going and then hoping that this vol implied move baked into it actually rises as you go into it. You could get a pretty good long vol play right now. You could probably do something like that if you're interested in trading that, some people call it the IV ramp. There's actually a potential for something like that to happen here. It's so funny, Kyle. I'm pretty sure on the last version of the terminal, the red line was was the red line the implied or the earnings? I feel like something switched up here. I keep making this mistake. Yes, John. What did you want to look at? The TQs, right? John, we actually have something really cool here. Have we taken it out for now? Yeah, we actually have some stuff coming in, pretty soon for the leveraged ETFs. We used to have a strategy built in. We're just doing some work on it where there's actually some alpha you can generate by shorting certain pairs of the 3x leveraged ETFs, right? It has to do with the volatility drag between the two. In the long run, these leveraged pairs, the leverage factor drags them both down in high volatile environments. So if you want, I can send you a video later that we did on that. Yeah, it's pretty cool, man. It's pretty cool stuff. I'll send you some info on it. But yeah, what did you want to look at for this? Right, if we go to maybe right, you can see what happened here with JNUG, and then if we go to JDust, I believe that was a pair that this has happened to. Right, you can see that both of them at the same time had this huge hit, right? And this is basically this is that factor that we're talking about. There are times where you could be short both of the pairs. And, it's not always this drastic, but if you look at a lot of the different pairs, what happened to them in the crash, they actually went to zero. And in the long run, a lot of these actually do follow this same suit, and it's that leverage factor that does it to them. The only time where it doesn't happen is when we get a trend in one direction. But when it chops around a lot, it chops with a downward chop in both of them. Yeah, and you know what, John? Actually, I'm going to send you a message after it. And, in case there's anyone else on the live who's maybe interested, we're actually going to be doing a little free trial for a few people, either next week or the week after. So, it'd be a 1 week free trial, cancel, and you don't get billed. You can totally come in and check it out. And I think you'll find it pretty cool because you get all the education to actually work this. There's a lot of features that I don't really use on this stream that you might find pretty cool, right? We have relative value tabs where, let's say you wanted to do a comparison of, I don't know, what kind of tickers, let's say you wanted to compare, a whole bunch of different assets against each other, right? Right. You want to do the IV 30-day for a bunch of different assets. You would be able to do that. Oh, Ernie, I didn't know you were here lurking in the background, man. You're usually a little more vocal. Hey, Ernie, if that's something that you're interested in, just shoot me an email. I'll put my email down here. And I'll add you to the list. I'm going to be giving away a few of them. That's so funny, man. Was there another earnings I wanted to take a look at? Maybe BKR. Yeah, BKR looking like a pretty good short op. But the only thing here, right, this is the thing about some of these earnings trades that we need to be careful with. We don't actually have a ton of data, right? We're looking here. We can see that, you know, the implied move is pretty high for it, but we only have 4 events to look at. So when we're, you know, looking at a stock like this, we need to really take the information we're being provided with a grain of salt. There's not much for us to work with here. It's only been around for a year. Okay, let's do one quick scan here. Let's see if we can find any cool short vol opportunities, maybe something in the market outside of earnings that could be pretty good right now. Just gonna start doing a little filter here. So I put in my option volume filter, IV versus forecast filter, price above 20, we'll say. I want to see a 30-day implied volatility above 35. Make sure that there's actually some movement happening around the stock. Let's see here. IV rank, let's put that above 70. And we have 4 stocks to look at here. Let's go for the ones with the highest implied vol versus the forecast. Fold, what's going on here? Wow, look at this skew. Huge downside skew. Anyone know what the news is around this? Do they have earnings? No. This is crazy. What's all this vol being priced in for? Okay, so let's see here. Is this fold? No, this is not fold. See, this is the thing about using Google News, right? We're bringing back the news and sentiment tab in the terminal because we're just getting a better data source for it. I fucking hate using, you know, this Google News. It's so garbage. Right, so here's what I would do. Honestly, I would take a look at what is driving this volatility around fold right now. Maybe is it a big retail stock? Are the retail boys hyping it up? No, not a ton of watchers. Message volume is climbing slowly. Very, very bullish. This is kind of interesting, actually. What's the case here? Let's see here. 21 bucks. Okay. We can see here that if we look at the vols, wow, look at this, guys. We're trading like way above the third quantile here. So off the bat, we sort of think to ourselves, oh, this is a really good short vol opportunity. But check this out, right? If we look at the last month here, realized vol has stayed low. Implied vol is just gone to the moon. Right? Like, this is pretty nuts. Right? Maybe, you know, something that I'm thinking here, right? Let's maybe piece this together a little bit. If we go to the retail sentiment, we can see the retail boys are very, very bullish, okay? Normally when we see the retail so bullish, we see some call skew, but we're actually seeing huge put skew right now. We're also seeing that the retail guys, they're not making up a huge portion of, you know, the people looking at it. Well, maybe something that's driving this volatility is news. So we come over to the news, right? If we just do fold stock, I'm seeing nothing. Right? 22 hours ago, is Aclaris it? No, it's not. Right? So there's no news. The retail guys are bullish. Market's pricing in huge downside risk right now. Implied volatility keeps rising. What the hell's going on here, guys? This is kind of an interesting little scenario. And they're pricing it in the pretty near, like a pretty short term. So maybe, let's come over here, see how liquid this thing is. Right, if we come here to the Febs, right, Febs are just priced through the roof. Right, maybe we do something, or is it, wait, what's going on here? Just give me 1 second. All right, you can see here this implied vol on the put side is just insane. Not to say it's low on the call side, but we're seeing this downside risk being priced in. So maybe we do something like this, right? Come here. All right, let's see here. If we change this to like, do something like this, right? It costs us 40 cents to put on. If we put 10 of them on, we'd have a max risk of about $400 and a max payoff of about $2,600 if the stock were to go below $15. So what we're basically taking a bet on here, right? If the stock goes below 17, we'd start printing. But what we're basically taking a bet on here is, you know, maybe there's something insider happening here, right? I know it's a bold claim to say on a live stream, but, you know, we out here saying it. Maybe there's something going on that the public eye is not aware of, right? Factors that are leading me to sort of think this might be the case are crazy increase in volume here. Right, volume dropped off today, but we had this day over here, right? Jan 12. Huge volume compared to what we usually see for this stock. You can see basically all-time high volume. We can see that the implied volatility has just been ramping up over the last month, right? In the last month, it's just been climbing and climbing and climbing. If we come over here to the earnings, earnings is not until March, so it's not earnings, right? We go over to the retail sentiment, no retail watchers, right? And they're all bullish, so I don't know why the puts would be so big. You know, we go over here to the news. I'm not seeing any news. No news, no retail, no volume, no vol, increasing implied vol. Kind of a weird little scenario, right? Another thing you could do if you think this thing's gonna like absolutely blow out to the downside, right? I have, by the way, like I've literally, this is like the first time I've ever looked at this stock. Right, you could come over here, you know, you could just buy something out of the money, right? You know, you could just buy a put. Right? If you know, this would be if you think it's going to zero, but if you don't think it's going to zero, then I think this vertical is a pretty decent little play. You know, maybe bring it in a little bit. Right, you do what you think is going to happen, right? You know, if you think the stock's going to drop, what's it trading at right now? $21. So if you think the stock's going to take the hit, like a pretty sizable hit here, this is a pretty good risk to reward trade to put on, right? Maybe the 16 or the 15 would also be pretty good. Right? What if we brought this up to maybe 20 here? Right? If you get filled on this, right? Let's see what the liquidity is like here. 2015. Yeah, it's not like super liquid. That's the only thing. All right, so you might have a little bit of trouble getting filled on this. It's not very liquid. But, if you could get this on, you get, a 1 to 5 risk reward if the stock goes below 1950. It's not bad. It's not bad at all. And something seems to be imminently about to happen. We'll take note of this. We'll revisit it in probably a week on the live stream. But this is a pretty interesting situation that we just found. What do you guys think? You have opinion on this? Have you guys been doing any research while I'm musing over this thing, mulling over it? Data Roma. What? I don't even know what that is. What is a data Roma? What's this, Ernie? Okay, cool. I'll take a look into this after the live. We had a couple others on this list, though. Twitter's actually up on this list right now. So one of our guys has been, having a pretty good ride on a short vol here. But we can see the vols are just back bid again right now. Back to like think of this, right? Like we're trading at 72 vols right now. We're approaching the highs here, right? Let's see if we take this off. You can see the 30 days are way above the third quantile there. But if we come out here, we're probably going to see, yep, we got earnings, right? Things are looking pretty in line here. Nothing too too out of whack. But Ernie, I want to touch on that point there. There's a really, I would say it's a misconception in the in the trading community that option volume can really tell us, or if we see like an order block coming in, right? They might say like, oh, strange option volume, $3 million worth of puts on XYZ company were just purchased, right? Someone has taken a huge bet on this stock going down. Well, it's actually pretty hard to draw that conclusion from the statement, somebody purchased $3 million worth of puts. Because, what if they're hedging a position, right? We don't know who this person is, right? What are the odds that someone's just taking an outright directional bet, right? If it's an insider, do you know how blatant, remember, insiders, what they're doing is illegal if they're trading their insider information. Coming in and buying a $3 million block of options is like begging to go to prison, right? So they're not going to do that. So it's not an insider. Maybe it's some punter, but what if it's somebody doing a relative value play, right? What if it's somebody who's, sold vol somewhere else and is buying vol here and is trading the spread? Or, what if it's somebody who's long a ton of the stock, hedging their position going into an earnings event, right? There's so many different things that could actually be that it's not really tradable information on its own. And we need to be really careful about that. It's one of the biggest mistakes that I think traders make is, and it's not to say, you're in the wrong. We haven't chatted enough about it. It's just to get you thinking. We hear someone tell us something, we see it for ourselves, and then we believe it, whether it's true or not. You know what I mean? Think about that. Somebody tells us that when a stock breaks out of the channel, it's going to continue to rally. Then we look at a chart, we look at a couple charts, we find where that happened, and we go, wow, it actually happened here. It happened there. But does that make it true? Right? Imagine you're sitting at a roulette table and someone tells you every time 2 reds come, it actually hits a 3rd red. And you sit there and you watch the table and you see red, red, and then you see a 3rd red. And you're like, wow, this actually works. I'm going to start using this as a strategy to beat the roulette table. Well, the thing is that we understand enough about the roulette table. It's more common knowledge with roulette that you actually don't have an advantage, and that type of stuff does not work. We're just not there yet in trading where people don't realize this. You're going to see in the next little while, we're going to be starting to do some podcasts with some pretty serious traders, people who've actually made very, very verifiable, successful careers in the volatility option space. And we'll ask them these questions as well, right? You don't have to take my word for it. Always the best way to do it is start off talking to someone who's verified, made it, right? Not somebody who has a Lamborghini, not somebody who's how I made $18 bajillion on Tesla in 5 minutes, like some of the people you might see on YouTube, but somebody who maybe has raised capital, who's verified, who's quoted by other successful people, and see what they have to say, right? I think that's always a good starting point. Let's just see if there's any last stocks that are worth taking a look at. So Lit is back on the radar, by the way. So we are actually back into a short vol position on Lit right now. And the stock is still rallying, right? We're seeing something pretty interesting with Lit here. Take this in, guys. Wait, 1 second. Well, this was the other way. What's going on? Right, in the recent times, if we zoom in here, when we see the stock come down a bit, we actually see the vol come down. So it's actually got this positive correlation right now. So what we're going to do is we are selling something like this maybe. Let's come out here and take a look. Right, we're still thinking vol is really expensive here on Lit. And let's look at maybe the Aprils. Lean a little bit positive on the deltas. Check this out. So the thing about this is if the stock, where is the stock trading right now? Is it at $70 now? Okay, so if the stock rallies a bit, we might see vols come up, right? So we move forward in time a bit, and vols come up maybe 4 points. We're going to only be down a tiny little bit of money here. But if the stock goes down, right, we are going to be getting that drop in vol, maybe, 8 points. And we're going to be making a ton of money, right? So what we're doing is sort of creating a range where we can actually potentially be a little bit profitable on both sides, right? If the stock rallies and time starts to pass, right, we're going to be making money because we have that leaning positive delta, even if the vols come up a bit, right? Vols, let's go up another 4 points. Right, you can see it, in Feb, we're still like a tiny bit profitable here, even if the stock rallies a bit. But if the stock drops, we're going to be getting that drop in vol, right? Maybe, if the stock drops, $7 or something, right? Stock drops down here, 10% drop, we would probably get that 10-point drop in vol, and we'd still be in the money. So this is sort of something we've been exploring recently, is how we can maybe use this type of a structure to take advantage of the correlation between the share price and the implied vols. But this is actually a trade that we're in right now. We are in on Lit, short volatility, and it's looking pretty good so far. Vols have come in a little bit more today. Makes me very happy, and we will keep you updated on that position. But yeah, that's basically what we wanted to go over on today's live. If you found this valuable, make sure to drop a like on the video and subscribe. And remember, we go live every single morning, and we're going to be actually releasing some pretty cool podcasts. So hit the notification bell and you'll be kept up to date with everything that we release on this channel. And Ernie, John, and anybody else who's actually just joining us now, I plan to be giving away a free trial to maybe 10 or 15 people in the next week. for the terminal, the Discord, all of our education, the whole PA package. It'll be a 1 week free trial. Cancel anytime. You won't get billed after it. And all I need you to do is send me an email, just with just so I have your contact details. It'll be on a first come, first serve basis. So shoot me off an email, and I will get you set up with that when we launch the program. And I think it's really worth checking out. I'm telling you, when you learn to work with data like this, it completely changes the way you look at trading. We can put down the crayons. We don't need to look at the charts anymore, and we can really start to use Wall Street's tools against them, right? Sort of like some David Goliath type shit, where except instead of using a little slingshot against Goliath, we're picking up his sword and swinging at him. So yeah, John, good to see you sticking around, man. I enjoyed having you on the stream. So let's keep in touch. All right, everyone, take it easy. We'll see you around.